Hello, everybody. The live trading room for the Equity Management Academy. This is Patrick MontesDeOca with a weekly special update on the gold and silver market. On September the 21st, we published a report called the Gold and Silver Update that you see here. And I'm going to read it to you to give you an idea of the essence of the report. With the gold market closing at an 8.5-month low on Friday, in its third week in a row, I examined closely the following facts. Bearish sentiment for gold and silver is at an all-time high. This coincides with the cyclical expectations that a major cyclical low is developing. The fact that the market came down and made new lows increases the probability that this bottom is the underlying long-term support necessary for this completion. Based on historic perspectives, this is usually when the markets make a turn. A convergence of short-term, intermediate, and long-term cycles are taking place during this time in price range. An extremely bullish indication that this could be developing the foundation necessary to resume the long-term secular bull market that is intact for the gold market. The US dollar expectations for a continuous bull run has lost its mojo when Yellen announced last Wednesday that interest rates will remain low for a prolonged and undetermined period of time, thus taking out all the fundamental support for the world's reserve currency based on rising interest rates and potentially making a top for the US dollar around the 85 levels. The only fundamental support the US dollar currently has is the fact that the rest of the world currencies are imploding faster on the weight of their unsustainable record debt levels. And I go further in quoting Michael Pinto regarding the expectations that he has of a 20% decline on the US dollar. The fundamentals show a deficit in supply in silver, and recent published data points argued basically that recycle cannot continue to meet the gap between supply and demand. On the technical side, I basically clearly indicate the technical picture in gold that I think might be best served if we go right into the report that was published, and we can see how it's doing since we published this report on the 21st of September, which I believe is on Sunday. Let's take a look at the gold and silver weekly report. In gold, it indicated that basically the gold futures contract closed on Friday at 12.17. The market closing below the 50-day moving average of 12.89 is confirmation that the weekly trend momentum was still bearish. A close above the 50-day would negate the weekly bearish short-term trend to neutral. So we came in to a bearish momentum from Friday. With the market closing below the VC weekly price momentum indicator of 12.25, it confirms that the price momentum was bearish. A close above 12.25 would negate the VC weekly, and it would basically negate the signal, the bearish signal to neutral. The weekly price indicator told you where you need to cover your short positions, and in here it tells you cover shorts on corrections at the 12.06 to 11.96 levels and go long on a weekly reversal stop. It tells you to reverse and go long. It's a reversal stop. And if you go long, then put your stop at 11.96. Let's take a look at the gold market as of today and see what happened this week. We made a new low yesterday of 1208.80. And on this chart, you can see the same algorithms or the codes that were published on the report, how close the market came in yesterday and touched the buy one level of 1206. The algorithm was indicating to buy into 1206 as the first level, and then 1196 if we got a chance to buy that second level. A close above 1225, currently trading at 2470, would negate this signal. And it would activate the uptrend. A close above 1225 would activate the uptrend with a target of 1235 to 1253 as the initial targets. But what I wanted to point out to you is that I believe that something is making the market basically identify this level down here as a major level of support. And what we want to see is a close above 1225 and ideally about 1295. And we will be able to, as we move into the end of this week, get up to as high as 1253. I'm sorry, the previous number was 1235 to 1253 are the targets for this week. We met the first target of 1235 indicated on the report. And so the rest of the week we're looking to meet the secondary target of 1253. On silver, if we look at the silver, the indicator told you to cover your short positions, that the momentum indicator was short coming in. 1816 is basically your metrics that will turn the negative trend to neutral. A close above it will be bullish. And the algorithm told you to cover short on corrections at the 1742 to 1706 levels. If we take a look at the low made yesterday in silver, let me see here if we can get a better picture. The low is 1732.50. So this activated basically the buy of 1742. It's long. The stop is 1706, and we're trading at 1780 right now. A close above 1816 would turn the momentum of the trend up, and we could see an acceleration all the way up to about 1852 to 1925 on the second target. We will update you every week on a more frequent basis as we feel that current prices right now in metals are truly offering a historic buying opportunity. This is Patrick MontesDeOca from the Equity Management Academy Live Trading.